Happy Monday, ladies and gentlemen, all in crypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily cryptocurrency market update. As always, we have a hell of a lot to get into. And if you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening in the cryptocurrency markets, but also the broader markets. That's exactly what we're going to be doing in this video. We've got some really interesting things to go over. We're going to be looking at something that hasn't happened in 45 years. That has just happened. It's to do with the macro markets and it's to do with the fiat systems and what backs the fiat systems, i.e. debt, and a phenomenon that hasn't happened in 45 years now taking place. We're also going to talk about liquidity and the growth of M2, which is the money supply. We know this is the great game of proliferation that essentially is thrust upon all of us. And people don't understand this game in the sense that they devalue money through increasing the supply of it. And the assets that money is pegged against doesn't increase in the same manner. This is why the rich get rich and the poor get poorer. And this is what we try and do on the channel, is really help people achieve some level of financial freedom, or comfortability, I should say, through understanding this. In regards to the first thing that's happened in 45 years and liquidity, money supply, we will be playing a clip of Ray Dalio talking about how a fiat system dies. And we're very much heading towards that. And we think this is what markets have been sniffing out. They've also been sniffing out the liquidity that we're now starting to see. The tweet that we're going to show you, and I'll just show you it straight off the bat, I think got it wrong. It said, simple rule, liquidity leads risk. No. Risk leads liquidity. Markets know what's going to happen before it happens. This is why technical analysis is something we champion, because your big players, your insiders will position before the event takes place. It's why markets sold off before any interest rates, and it's why they're now going up before any interest rate cuts. So we are going to be talking about that very interesting topic, very relevant, relatable to the cryptocurrency space, which is the fastest horse in this currency devaluation game. You know, we still have the bulk of the bull market ahead of us. We will be talking about that and going over to Bitcoin, which is in a very much flag-esque structure and clearly in a broader uptrend. Interesting news in regards to Ethereum. We have one of the Ethereum applications now removing staking from their spot Ethereum ETF. I think this is a pain point. We also had a huge jump in the probabilities, according to Polymarkets, of Ethereum's ETF actually being approved on the 31st of May. So we are going to be looking at that. We'll also be diving over to Polymarket and showing you it from the kind of horse's mouth. And then talking a little bit about the week ahead, because it's certainly an interesting one. So we have a hell of a lot to get into. Let's talk about what took place just the other day for the first time in 45 years and why this is significant, certainly to the cryptocurrency space. So this is US Treasuries are now more volatile than gold. 7-year rolling monthly downside volatility differential, long-term Treasury total return, and gold's return in layman's terms. So what are Treasuries? What are US Treasuries? Well, Treasuries are essentially how the government gets money. So all governments, pretty much all governments, are moving towards very quickly a Japanese-style economy where they run deficits. And ultimately, when they want to spend, and Biden is a maniac at this, you know, Stan Druckenmiller saying he'd give him an F for Bidenomics because they're spending like we're in a recession, depression, even though we've got all this productivity. And it's not really, it's great for me as an asset investor, crypto investor, because we're appreciating it, but generally it's not a smart move. And restraint is something that isn't practiced by certainly political parties and the spending that they induce. But if the government wants to issue and spend money, they need to get that from somewhere, and they do that in the form of an IOU. So they issue a treasury, which is an IOU that gets bought up, sometimes by themselves, like what they're doing at the moment, often by the Fed, certainly since 2008, when, of course, everything officially broke, which is coincidentally when Bitcoin came around. And the treasuries are what backs the fiat that is out there. So treasuries are held. It's a double accounting system. Now, treasuries have been in a 40-something year bull market, or bonds have been, and yields have been in a bear market. And with bonds in a bull market, they've been consistently bought, and that's also pumped risk with it. So assets and bonds are very correlated. Bonds and gold are very correlated up until recently, because the Fed, of course, isn't stepping in. But they are going to have to do that. Now, this is where it gets significant for us because everybody is stuck to the gills. They're mandated in many cases to have government issued bonds in pension funds, in fund managing, so on and so forth. And now there is a waking up to the fact that actually bonds are no longer the safest alternative asset. They're no longer the safest asset, and actually gold is showing less volatility and better returns than the likes of bonds. So there's a real moving away from bonds, which there cannot be, because the value of bonds will devalue, and then you'll see bank runs and things like this, which the Fed is not going to allow to happen. And we are seeing M2. So I think this individual was wrong. He is saying simple rule, liquidity leads risk. M2 growth now positive. QT surprised by Fed. Rate cuts in 2024. Pain trade due north. So you are, what actually leads risk is, or risk leads liquidity. So you'll see risk assets move before liquidity tap comes back on. It's not the other way around. I'm not familiar with this individual. He's clearly a doctorate in something. But we're now in a situation where they're increasing the money supply through issuing more debt at a time when debt isn't that appealing, which means, in my opinion, the Fed is going to have to step back in. And this is what sees this great asset bubble that we're talking about and that we're already well and truly on the way of. And it comes on the devaluation, essentially the proliferation of the Fiat systems to actually support them. And I wanted to quickly play a clip of Ray Dalio. We'll speed it up, talking about how Fiat systems die. And then, of course, you've got this great alternative Bitcoin that is now about. What happens if when a currency starts to lose its value and the game kind of comes up in it, where does that money kind of go? Where does that value go? It goes into assets. There's so much alpha when I say the Nikkei is a short yen trade, the SPY is a short dollar trade, Bitcoin is a short dollar trade. Everything essentially, and a real asset is a short dollar and short fiat trade, because there's a lot of trust lost in the system, and now we're seeing actually fundamental reasons for it not being a desired asset. And the only conclusion that you can come to is that the Fed is now going to have to step in and prop up the whole system, like the Treasury has kind of been doing. So let's dive into this clip of Ryan.
Indicators of when a fiat currency is going to decline into a collapse is when those who are holding its debt sell the debt, and the government, central bank, has to print money to buy that debt in large size while that's going down. Those are the most important indicators, so that you can see it. Again, I want to repeat, selling the debt so that there's a big supply-demand imbalance, and the central bank having to come in there and buy the debt that no one else will buy in large quantity, so that then there's a currency devaluation. You have those three things aligned, the currency devaluation going down at the same time as those other two things are happening. And that's been a classic. It's like a bank run. They come to the bank, there's not enough money in the bank, and so they have to make up the difference by the printing of money.
And that is where we are today, ladies and gentlemen. I know that everyone wants to just get straight into crypto, but this is so relevant to everybody's life. It's certainly important for me to sort of touch on it and cover it. And that is very much where we are today. Debt is no longer attractive. Certainly with the Fed maintaining a hawkish stance. They did say that they were going to stop tapering off their QT. The Treasury will run out of money and have to go to the Fed or somebody as a buyer, because the Treasury always runs out of money. But their TGA account, I think, has about $1 trillion in it. The reverse repo has, and do you know what? We'll pull it up whilst we're talking about it. I hope you guys don't mind me spending a little bit of time on this, because it is just so important to everybody's life. We don't want log. So this is where they up the debt ceiling. And they've drained it from $2.6 trillion in a very short succession of time, by the way, all the way down to $486 billion. So they've wiped $2 trillion off of it. They are going to run out of money soon, and the Fed is going to have to be the buyer of last resort. And it's actually why, me saying all this, I actually think that bonds are going to turn eventually. We haven't been in the ding-dong buy bonds where diamonds camp, like all these great macro, basically LARPs. There's no... if you look at the calls they've made, there's no kind of real credibility to them. But you've got a lot of volume coming in here, perhaps suggesting an equilibrium for bonds and a bullish divergence, which means it could be getting or looking to get a bid at some point. The question is who's going to be bidding that? It's going to be the Fed. It's going to be liquidity. It's all going to pump assets. And to really just finish this point very quickly, Bitcoin and crypto is the fastest horse in a kind of proliferation game. So this is Bitcoin against gold. I have two high targets for this. This is Bitcoin against the SPY, Bitcoin against the NASDAQ. And when we divide, I'll do it very quickly. Total 2, which is the altcoin market, by these assets, both very clearly now in an uptrend, very similar. If anyone studies market structure, things like Stan Weinstein stage analysis or Dow theory or anything of the sort. So we have an amazing bull market ahead of us that's coming on the back end of the proliferation of the fiat systems, which is great for investors. It's bad for everyday people, and because things are getting more and more unaffordable. And this is not by this is by design, is what I want to say. Let's talk a little bit about some news involving Ethereum before we dive into some more immediate charts relating to Bitcoin. ARK Invest 21 shares removes staking plans from their spot ETH ETF proposal. Very interesting how quite a few of them are making changes, or we saw, I think it was Wisdom Tree withdrew their futures ETF just last week. This is something that's interesting. So ETH ETF approval increased nearly 100% yesterday for May. I don't think it is unlikely we get an approval in May, more so late 2020. Yeah, so I agree with this individual. No idea who this guy is. But you can see there was a slight increase. So we were looking at about 6% chance. We're now looking at about a 16% chance. I'm not convinced. I think they're perhaps going to stall it. It would be great if they eventually do. Remember, I do believe that you are going to end up with an ETH ETF based on the ETH BTC chart. ETH BTC, which I think has been setting up in a large continuation pattern for a long time and will eventually break to the upside and be very explosive when it does. That's likely going to come on the back end of regulatory clarity and ETH dominance. And we're still really yet to see a bull market for altcoins in regards to BTC DOM, which I still think is going to top. Of course, I would say that. So very interesting in regards to the Ethereum ETFs. Let's talk about Bitcoin on the short term before we dive into the week ahead. Bit of a longer update today, but quite a lot to cover. So we are very much blatantly, so we spoke a little bit about the macro, we're filtering it right down now. We are very much in an uptrend. This is all the technical work that we've been doing for Bitcoin. We've had to take a lot off and leave a lot out. But you are now, just in the same way that we were calling this inverse head and shoulders, looking at a bigger inverse head and shoulders, it's going to take you to 150K. Okay, this is just a pullback. It's pulling back in a very flag-like structure. And this could be a bit of a spring. Anybody that's familiar with Wyckoff, I don't like to bring up Wyckoff because everybody tries to apply it to everything. All of a sudden, everything's a Wyckoff. Really, Wyckoff's market structure was for bigger time frames, looking at bottoms, looking at the tops, accumulations and distributions. But the spring, the kind of last low before it sort of starts to pick itself up, could very much be in place. If we look at things like Ethereum, this is a really good channel that I do think you are looking likely to come out of the top of. We just need to kind of see it take place. So I do think the cryptocurrency market, certainly when we look at the stock market, it doesn't look too bad. The SPY did break out of that broadening channel we were looking at and is now looking at new all-time highs. The reason most of your indexes are at all-time highs is very simply because of what's happening with the fiat systems, which is what we spent quite a lot of time talking about at the start. So I do think this bull market gets rocking and rolling again. Crypto is going to be the fastest horse. You want to be in assets or the right class in regards to crypto. For me, that's deep in AI, these sort of sectors, and you can find out what I own by becoming a Patreon. You can also take part in our 1 to 100x challenge. Since we got in last week, I think we're only something like 11, 12% up. But we've just started it. A little bit of volatility. Market's still kind of broadly correcting a little bit and finding its feet. We do expect those coins to get rocking and rolling. It's going to be an interesting week. You are going to get more. What's really driven the pullback is uncertainty around inflation. You've got PPIs tomorrow for the US, and you've got PCIs CPIs coming out, which is going to be interesting. So a lower print on this would be good. Higher print obviously would dampen the possibility of rates, and the markets would and have been, since inflation's been going a little bit sideways and we've had some sort of bumpy data, really just been correcting for everything. And Bitcoin crypto is still a very high, it's basically a high beta play on risk, which we assess is broadly in an uptrend based on largely what we looked at the start of the video. Just to show you M2 with some assets on to kind of put this to bed. I don't feel like there's many people that can sort of not only understand and get their heads around what's taking place, but actually then technically back it up on the charts like we can. If you do know any, let me know in the comment section, because I'm always looking. I rarely have the time to watch other individuals, but if somebody's worth their salt, so people like Francis Hunt, we absolutely love to watch, and of course, there are some out there, but the vast majority of people, I think, are just regurgitating stuff that they can't even explain. But just to put a few assets on, this is M2 money supply. Essentially, they removed M1, and this is assets, and they're going to have to increase that money supply due to the kind of debt system and the burden of it and where it's at, and they need interest rates probably more so than anybody. On that note, ladies and gentlemen, I am going to love and leave you. Thanks a lot for watching as always. If you've enjoyed the content, like us, appreciate it, as a comment. Look forward to seeing you all in the next one. Thanks a lot for watching. See you in the next.